Tesla's recently announced 5% price cuts in China are about to permanently change the China EV landscape, not only for the good, but also for the bad. Given the insane high competition in the country, some companies are going to benefit greatly from this move in the long term, whereas some will likely struggle in the short term because of just how fast the China EV market is growing. Companies like NIO and Xpeng are expected to struggle with these price cuts in the short term, whereas businesses like BYD and Li Auto are supposedly expected to benefit. Well, how exactly is that going to work, and why is a company like Xpeng Motors struggling the most out of all the Chinese EV makers? Well, those questions are exactly what I want to discuss in this video, along with understanding why BYD has been one of the most successful companies in this space. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's try to understand what are the implications of Tesla's price cuts. Now, to be honest, as an investor and somebody who saw the overall macro landscape in China, I am not surprised by this price cut. Inflationary pressures with rising pack costs increased the cost of goods sold for EVs, and so Tesla raised prices throughout 2020 and 2021, and with now the deflationary effects of the global macroeconomic recessionary forces, it's no surprise that prices are going to get cut. And obviously we all know the reason why that's happening, because Tesla is facing competition in China from a lot of other companies. If Tesla had unlimited demand for its products, it would have kept the prices the exact same. But they're lowering the prices because now they have a buffer to lower them as lithium battery costs are coming down and inflationary pressures across the entire world have fallen. But as you all might have already seen, this is going to cause mayhem for some China EV stocks because companies in this space are already struggling to ramp up production profitably in a market that is obviously extremely saturated. And so now that Tesla's cutting prices on their best-selling products, the Model 3 and the Model Y, companies that are selling more affordable cars in that exact segment are going to be forced to cut their prices as well. And this right here is exactly what's causing problems and uncertainties for companies like Xpeng Motors and NIO that do tend to sell products that compete directly with the Model Y and the Model 3. But there is one company that is surprisingly immune to all this uncertainty, and that is the Warren Buffett-backed BYD. BYD reported record deliveries in December of 2022 with record revenue and record profit. That is extremely impressive for a company in a space as competitive as the EV industry and in a time when overall macro conditions are not supporting growth and capital expenditure. This is leading a lot of investors to question whether or not BYD is actually the best bet in the EV space, potentially overtaking Tesla in overall deliveries. And for those folks, I have some really interesting data to share. BYD is not just an EV company, and that is exactly why it has performed so well. You see, BYD is a massive conglomerate that has been selling not only electric vehicles, but buses, trucks, and actual internal combustion cars for the past 2 decades. This company also manufactures its own battery cells and has supply chains in Australia, China, and even Europe aside from North America. And because of the scale that this company's built, BYD is actually a profitable business. So when you hear about its record profit and record revenues, you need to keep in mind that this company has been in operation for more than 20 years. Companies like NIO, Xpeng Motors, and even Li Auto have been in the industry for almost around 5 to 6 years in a time when the market is getting so competitive. So it's very difficult for us to compare businesses like BYD directly to startups like those. And this is probably the reason why BYD's 2020 total sales grew by 152%, when a company like NIO's grew around 40% and Xpeng's around 23%. Because guess what? BYD does not only just sell electric vehicles, they also sell plug-in hybrid vehicles that have an internal combustion engine. And these are what they classify as the NEVs, or the new energy vehicles. And because of that, to me, it's no surprise that BYD is outselling Tesla and has outcompeted Xpeng and NIO, because obviously the company is operating in a completely different stage of life. And I think that neatly brings us on to the question about why Xpeng and NIO have been struggling comparatively in 2022. Because apart from just BYD, there has been another company by the name of Li Auto that has actually performed relatively well. And unfortunately, many people don't realize the same reason that BYD is successful is also the reason why Li Auto is successful. And that's because Li Auto sells plug-in hybrid electric vehicles that have an internal combustion engine. This has resulted in Li's overall quarterly revenue to hold relatively steady in 2022, with their free cash flow actually having been in the positive for a majority of the year. Because let's be honest, a plug-in hybrid vehicle can provide you a longer range than a battery electric vehicle, and also the ability to fuel up at any gas station. So the value proposition and the market for those kinds of vehicles is completely different from something like NIO or Xpeng motors. Battery electric vehicles like Tesla's have significantly less margins and are much more difficult to market to your average consumer. Now, this means that the competition for these companies in China is going to increase, but it also means that the overall opportunity from a stricter regulatory standpoint is going to be bigger for these companies as well. And so yes, in the short term, these battery electric only companies have disadvantages because of their higher cash burn, more capital investment required for building factories, and the obviously extremely volatile battery supply chain. But on the other hand, it also allows these companies to focus on extremely high value features like autonomous driving and automation. And that is something that's clearly missing with a company like Li Auto or potentially even BYD. As you can see, the recently announced Xpeng G9 SUV, which is a 7-seater competing with the Li L9, actually beats the car on every single metric apart from range. Range is obviously going to be high because it uses a 1.5 liter inline-4 engine to increase the range of the overall battery. But if you exclude that, the overall specs of a battery electric only vehicle is actually significantly better. And obviously the production and usage carbon emissions of a G9 are going to be significantly lower than the L9 because of the obvious gas engine. And it's pretty clear that BYD is showing us the problems of running internal combustion engines. As I just showed you, they phased out internal combustion engine production in March of 2022 with their sole focus on plug-in hybrid and battery electric. So we could expect that in the next 5 to 10 years, they slowly start phasing out their plug-in hybrid vehicles as well because of stricter regulations and the very high costs associated with gasoline manufacturing. And yeah, it's true that in the short term, profits for Li Auto and BYD are going to be higher because the gasoline supply chain is significantly more profitable than a battery electric only. But in the long term, as the demand for battery electric vehicles rise, as China enters out of this recession, I think battery electric companies like NIO and Xpeng Motors will end up doing just okay. That is obviously assuming that these companies both execute at a high level, they're raising the right amount of capital, and they're not pursuing products that make absolutely no sense. Because obviously we've seen in 2022 just how difficult it can be for companies when they're struggling in a recessionary environment. Xpeng Motors, for example, had its slowest year-over-year growth in 2020 of only around 23%, whereas NIO ended up cutting its Q4 delivery and production estimates. But to be honest though, these slowdowns are expected. Both companies are in the battery electric only space in a time when China is facing so many geopolitical concerns. Consumers in the China space are extremely picky, particularly with the types of products they buy. As you can clearly see in December, new vehicle registrations for NEVs or new energy vehicles was dominated by Geely and BYD. Both of these companies do sell predominantly plug-in hybrid vehicles only, and as a result, it's easy to see why Tesla, NIO, and even Xpeng are so far down on the list. Even Li Auto almost doubled the rate of Tesla, which just shows you and puts into perspective the dominance of plug-in hybrid. But obviously the question as an investor is how can you take advantage of this kind of slump? Now, I don't know exactly what China is going to do in 2023. I expect a recovery in sales and demand and growth because obviously China is going into an expansionary phase with stimulus and interest rate cuts. But overall, I think the same principles will apply in 2023 as it did in 2022. It's all about finding the companies that are executing better, that have a better product roadmap, and also companies that might be trading at a better valuation compared to others. You guys already know that personally I'm invested in Xpeng Motors on the New York Stock Exchange, and in 2022 it's been a pretty disappointing year for the company, not only because of the recessionary forces, but actually because of some misses with the company's own execution. This isn't really a terminal problem that's going to affect Xpeng in the long term, but they have faced some issues with the launch of the revolutionary G9 SUV, which I think is going to be a complete game changer for the company. The company did have fantastic sales in green here in the start of 2022, but it looks like a lot of that demand was pulled forward, which resulted in a massive slump going into the summer. We have seen a big recovery here in December, but it seems like that is exactly what the market cares about. And so as an investor, for me, I am betting on deliveries recovering in 2023 if I'm going to continue to be an investor in this company. Because of their falling sales, they've had to put in a lot of cost controls in 2022, which is a good sign to see as a company that is growing at a fast pace. And after doing some research, I think the biggest reason Xpeng sales fell in 2022 is because they don't have a wide enough product lineup to target the middle class of China. Mostly Xpeng sells the G3i SUV and a compact and sports sedan, which obviously appeal more to the lower middle class, not really the top class, which is where Li Auto and BYD step in. And it's actually extremely well known that the Chinese consumer prefers big SUVs than smaller sedans, which is obviously where the G9 SUV's ramp really comes into play, which only started in the September of 2022. And because a company like NIO, which is Xpeng's nearest competitor, has been launching new products left, right, and center in a massive shift in its overall strategy, it's very easy to see why Xpeng has struggled. The Chinese consumer likes SUVs, bigger vehicles, and crossovers, so it's going to be important in 2023 for Xpeng to invest in those segments. The G9 itself, in my opinion, can help carry Xpeng to better profits and margins in 23, but overall it's going to be important for them to invest in those segments and also make sure that their product launches and direct-to-consumer experiences are much better than the competition. I sincerely think the company is on the right path for execution with their AI, autonomous driving, and charging infrastructure package. It's just about making sure they're innovating their product lineup at the right pace. And this investment criteria that I'm applying to Xpeng can be applied to any company. One of the main reasons why I continue to be a holder of this business is because their gross margins have actually improved to near all-time highs in the fourth and second quarter of this year, despite slumping sales. When revenue goes up, gross margin does tend to also follow because of economies of scale. The fact that Xpeng has actually been reducing their cost while their sales are coming down is actually a really important thing. Obviously, even though their deliveries have gone down, their revenue has not collapsed to 2021 levels. It's just seen a slowdown from recessionary forces and their lower end product lineup. From a financial standpoint, the company has more than enough money to cover most of its current debt, and that means that the company is not going to really face a liquidity crisis for at least the next 18 months. And that is exactly why I continue to be an investor in Xpeng Motors and why I think companies like NIO and Xpeng have struggled relative to Li Auto and BYD. But obviously guys, that is just my opinion on the situation, so let me know your thoughts down in the comment section below.